It's been a busy day for Canadian economic news and trading in the loonie. We've had a number of reports come out that have been very positive for the Canadian economy. We'll recall that back in the spring we had the big wildfires in Fort McMurray, which devastated the town and also had a big impact on Canada's economy, shutting down the oil sands, many plants for the better part of a month. The Bank of Canada at the time had said that Q2 would be poor for Canada, obviously, but that we'd see a rebound in the third quarter. Going through July and August, that was a little bit questionable, but now we're starting to see data for September that indicates the Canadian economy is really starting to pick up. First of all, we had the GDP report for July last week. That wasn't as bad as people thought, so that gave some encouragement. Today, we've had some really good numbers out of Canada. First of all, we had 67,000 jobs created in September. This was split 23,000 full-time, 44,000 part-time. Now, some of this was a seasonal switch at the end of the summer from full-time seasonal employment to part-time employment, but still, even the full-time number was well above what the street was expecting. Great news for Canada on that. Then later in the morning, we had the IV Purchasing Managers Index, also a big uptick for Canada, jumped to 58.4 from 52.3. Definitely seeing signs of improvement in Canada in September. What does this mean for the Bank of Canada? It means that the Bank of Canada is under less pressure to cut rates now. Every other major resource-producing country's central bank has cut rates this year except Canada. There was a feeling that if the economy stayed soft, they'd have to cut. They're not going to have to cut rates this year if Canada keeps putting up numbers like that. They're not likely to raise rates either with oil price still down and the economy still struggling. But the Fed, it looks like, could raise rates, which also may help Canada, although it could depress the loonie a little bit. What have we seen this week? We've had the loonie's been weakening over the last few months, and we did see a bit of a breakdown here, and now we're watching it because we're still at a fairly key trading level. We've been trending lower. A lot of this, especially recently, has been a function of the fact that the U.S. dollar's been rallying because crude oil has been rallying as well. That usually puts a tailwind behind the loonie. We've got oil rising, good for the loonie. We've got great Canadian economy, should be good for the loonie. In fact, the loonie's been heading the other way. It recently slipped under 76, 75, 50 here. And was declining. So in fact, we've seen a bit of weakness here. We'll see. We did see a pop here though on the employment numbers, and a smaller pop here around the IV Purchasing Managers numbers. So we'll see what happens. But we still have a number of things that can influence trading in the loonie.